Hello everyone and welcome to the weekly market update from ICM.com. I'm Wael Makarem, market analyst, and I'll be talking about the latest developments of the coronavirus, the US-Chinese tension, top economic events for the week, and applying some technical analysis to top trading instruments. So first, let's start with the coronavirus. Developments. President Trump just tweeted that numbers are looking much better, going down almost everywhere, and that there is a great job being done in the United States. However, the total confirmed cases surpassed 4 million, and the total recovered are closing in to 1.5 million. Some European nations began easing restrictions, where people in France were able to walk in public without permission for the first time in 8 weeks, and in some cities in Spain, they were allowed also to meet friends and families in outdoor restaurants. However, there were some bad news from China. There is an untraced outbreak in a city near the Russian border. Also, Wuhan reported 5 new cases, which was the highest since March 11. This triggered a lot of thoughts or a lot of complications of possibility of a second wave wave outbreak for the virus. So this is from China. The US Vice President, also Mike Pence, is taking precautions after an assistant tested positive. Treasury Secretary Stephen Mnuchin, he urged governors to reopen the states as soon as possible to avoid further deterioration in the economic activity and economic outlook, since the coronavirus weighed a lot on the economic activity in the United States. So the Treasury Secretary Stephen Mnuchin, he urged governors to reopen the economy again and get back to business as soon as possible. While the White House is currently considering a new round of stimulus, as published yesterday, they started some talks with Republicans and Democrats in order to go for a second round of stimulus. Moving to the developments between China and the United States, which were emerging and affecting the markets last week. So first, there was a call between top trade negotiators from both China and the United States that took place last week. Both parties they agreed to create a better conditions to implement the Phase 1 trade deal and cooperate on economy and public health. However, President Trump remained on the offensive, stating that he has been struggling with Beijing and he didn't yet decide whether he should end the trade deal, the Phase 1 that they started by reaching a Phase 1 trade deal back a couple of months ago, or impose tariffs to punish China for the outbreak. So this is the latest between China and the United States. There was some positivity from the call made between the top trade negotiators between China and the United States, and also some negativity again from President Trump. So this is for this matter. There is this chart also showing the exports from United States to China from January till March, where China is still far away from reaching the target that was set during the Phase 1 trade deal. So China needs to expand its purchases quickly in order to meet the target. Maybe President Trump is betting on this figure that China will need to do more. Especially, we have to take into consideration that China is coming back to recovery. Lately, they were hit heavily by the coronavirus, so maybe it will need much effort in order to meet the obligations that they signed for in the Phase 1 trade deal. So they have to keep in mind this chart. China needs to do a lot more of purchases from the United States in order to reach the 200 billion target that was set during the Phase 1 trade deal. Now we're going to go to pinpoint the top economic releases and events for the week. On Tuesday, we start early with the consumer price index from China, where a fall by 0.5% expected month-on-month for April. Also, the US consumer price index figures will be published too, where also there is a consensus of a drop of 0.2% for the core CPI and 0.7% for the generic CPI in April. Also, we end the day with the American Petroleum Institute weekly crude oil stock that was previously at 8.4%. On Wednesday, we start early with the Reserve Bank of New Zealand, where the bank is widely expected to keep interest rates unchanged at 0.25%, but there is a likelihood for expanding the quantitative easing program, especially after the hit taken by the inflation expectations. The inflation expectations dropped lately in New Zealand, which could trigger more activity or more easing by the Reserve Bank of New Zealand in order to lift inflation expectations levels at least. So this is from the Reserve Bank of New Zealand. Also, the first reading, we have a series of economic indicators coming out from the United Kingdom on Wednesday. We start with a preliminary reading of the first quarter GDP, where a contraction of 2.5% is expected, compared to previously no growth, no change in GDP. It was at 0.0%. Also, the industrial and manufacturing production expectations of a drop by 5.6% and 6.0% respectively in March. And the trade balance, nothing much of a big change, around minus 10 billion pounds versus minus 11.49 previously. The industrial production from the Eurozone for March, also a contraction by 12%, which is a big number for the Eurozone. So you have to keep in mind to focus on the effects of this contraction on the economy as a whole. From the United States, you have the producer price index for April, where month-on-month also a drop of 0.5% is expected. And later we have Chairman Powell. He is due to speak about current economic issues at a webinar organized by the Peterson Institute for International Economics. So his words will be monitored closely if he hints for any, especially if he has anything to say about the future path of interest rates. Everyone is looking carefully for any clarifications regarding the future path of interest rates, especially that last week the Fed's funds target also showed some probability of having negative interest rates present, negativity or negative interest rates. And lastly, the weekly oil report by the US Energy Information Administration. It is good to know that the rate of inventories buildup was dropping in the past 2 weeks, which could be a signal for rising demand in the United States. So previously it was at 4.59%. We witnessed during early April a rise towards almost 20 million barrels a week, which was a record buildup week on week. So for Thursday, also we start with the April jobs figures from Australia. The job losses around 575,000, and unemployment rate to rise to 8.3% from 5.2 previously. Also, New Zealand will announce the annual budget. We move to the European trading session with the German CPI, a slight rise in April by 0.3%. The ECB economic bulletin. Bank of England Governor Bailey will also participate in a webinar to talk about the current conditions. Also, his words will be monitored closely, despite having keeping interest rates and keeping monetary policy unchanged during the Bank of England meeting last week. The weekly jobless claims rise by 2.5 million is expected, which is the least in the past couple of weeks. Canadian manufacturing sales drop by 5.7%, and finally, Governor Pelosi is holding a press conference about the financial system review in Ottawa. On Friday, Chinese industrial production for April is surged by 1.5%. From previously minus 1.1%. So this is showing the recovery in the industrial production in China for April. So a surge by 1.5% year on year. Retail sales a contraction by 7.5%, but still better than the previous reading of minus 15.8. So also it hints for better activity. From the Eurozone, the German GDP, the first reading of the first quarter German GDP, a contraction of 2.2% expected. And then we move to the United States with the retail sales figures were a drop of 11.6 and 8.6% for core retail sales. Industrial production down 11.5%, business inventories down 0.3%, jobs openings, and Michigan consumer sentiment a slight drop to 68.5. And we ended the week with the U.S. Baker Hughes oil rig count, which stayed at 292 rig counts last week. So this is for the top economic events. So we have three central bank governors speaking: Federal Reserve Chairman Jerome Powell, Bank of England Governor Bailey, and Bank of Canada Governor Pelosi. They are due to speak this week. Also, we have the Reserve Bank of New Zealand monetary policy meeting early on Wednesday. So these are the top events for the week. Now we're going to go to the MetaTrader 4 to have some insight on the top trading instrument. We start with the dollar index. Mainly on the currencies, there isn't much of anything happening for the past couple of weeks. We're still trading in the same consolidation zone. Central banks are clear with their path. They all went to easing. There are no implications of or expectations of sharp movements in the coming weeks. So the market isn't pricing in any moves for the future. So we're still trading inside a consolidation zone for the past couple of weeks. So this is for the dollar index, a little bit of a rise amid the demand for safety during the first trading hours of the week, especially amid growing fears of a second wave following the Chinese COVID numbers. So this is for the weekly chart. Nothing much of a change. We're still inside this consolidation zone. If we go for the daily chart, it is more clear. So we have this support level here, and we have another support, and for resistance also we have the stop here. So we're trading inside this almost 200 points consolidation zone between 98.73 and almost 100 point 96. So this is for the dollar index. If we have a closer look on the hourly chart, we see today's rise following last week's drop, especially after the drop in the sluggish jobs report, which was published on Friday, showing a loss of almost 20.5 million jobs and unemployment rate rising to 14.7. If we plot some of the technical indicators, we can see here that the dollar index is playing with the 100 and 200 hour exponential moving average. The Bollinger Bands diverged a little bit earlier today with the move higher. The RSI was capped by 70, so nothing much to show on the dollar index. So to recap, we have to look for these key levels for any break above or trade below. So you have to keep in mind to focus on almost 101 from the upside, and on the downside 98.7 and 98.3. So this is for the dollar index. The euro is almost exactly the opposite of the dollar. So here we have a clear reversal last week. So all the gains earned during the last week of April, we saw last week a huge drop, erasing all the gains uh, earned during this week. If we go for the daily charts, also we can see here this consolidation zone. We're trading despite having a lower low here. We failed to do a lower low until the current moment, and also the market had a higher high. So also a little bit of consolidation. It is clear consolidation inside this zone. If we go for the hourly chart, also nothing much to show. The activity is a bit shy. Despite these moves, we're still on the bigger picture. We are trading inside a consolidation zone. If we set some indicators, we have a tight movement for the past two trading days between 1.0875 and 1.0813, so almost a 60 pip range. Also, the Bollinger Bands are closing into each other, showing low volatility or signaling for low volatility. So maybe we could wait for a breakout either to the upside or the downside. So you have to watch out for these levels at 1.0870 and 1.08 almost for any move. The prices are trading near the 100 and 200 hour exponential moving average, awaiting for fresh fundamental drivers in order to have a leg higher or a leg lower. So you have to keep in mind these levels, 1.0870 and again 1.08 for the euro dollar. If we go for the pound, so for the pound dollar, also the picture is similar to other major currency pairs. Uh, Started the week on a weaker note. We're still also in a bigger consolidation zone. It is clear here after this move, prices begin to consolidate inside this almost 400 pip range. So you have to be careful for any move below 122.47 and 1.2165. And from the upside, you have to keep in mind 1.2645, as any break above it could lead to a rally higher towards 1.28 and 1.29 level. So this is for the British pound. If we go for the hourly chart, it is also clear here. We're still finding support near the previous low, and resistance also near the previous high. So we have an interim resistance here near this level at 24.70 almost. So you have to look for this as first resistance level, and then the second resistance comes in at 26.45, and for support you have to look for 22.47 and 21.60. So this is for the British pound. We have a high, but also here we have almost similar highs, and then similar support for the British pound. For the dollar yen, we had a quick recovery for the past couple of days from the dollar yen. We saw a huge, a very pretty nice reversal on the weekly candle, and the market is inching higher. So we're trading higher today near 170, 107.51. On the hourly chart, we talked about this falling wedge last week, and the market was able to break above the falling wedge. And currently we are monitoring this level that we talked about during the past 2 weeks, 108.05, which was a clear resistance during late April. So you have to look for 108 for reversal. We have here a little bit of resistance near 107.50. So these are the levels to look for the upside, 107.50, 108, and then the bigger consolidation zone that we were trading at almost near 130 for 130 level. So this is from the upside. On the downside, we have to look for another break below 107, or we could look for some support at 107, which was earlier a pretty good support during April, and the low of 105, 105.95, 106. So this is for the dollar yen. From the upside, you have to look for 108 level and 1930, and from the downside, you have to look for 107, 1690, and again at 105.95. So these are for the levels for the dollar yen. If you go for the Australian dollar, a little bit of a move lower as risk sentiment took a little bit of a hit. So clear reversal from the previous high. So here we have, you have to keep in mind first this level here, which was 64.43. You can take it as a pivot. Also here we witnessed a little bit of a down double bottom so you have to also be careful for any move below the support level of 63.70, and on the upside a break above 65.70 could lead to more gains. The Australian dollar is being so sensitive to risk, so any positive news, any positive positive activity that could lift risk sentiment, we could see positive rally for the Australian dollar, and vice versa. Any negativity, any talks about fresh second round and second outbreak in China could weigh on the pair, and we could see the pair dropping to the first support zone near 63.70, and maybe we could retest 62.56 on a bigger scale correction or a bigger time frame. So this is for the Australian dollar. We go for the Canadian dollar, which was performing. The Canadian dollar was strengthening against the US dollar last week, especially as oil prices were slightly better. So this is for, just deleting these lines so we have a better vision. So here, the market had clear reversal last week. The Canadian dollar gained some strength last week. However, we are seeing some correction today. We go for the daily chart. We are still stuck in this consolidation zone also. So if we go for a closer look on the hourly chart, you can see the market is trading near these three tops and also finding support near this bottom. So you have to look for a breakout either above this trend line, and then look for this level as a resistance at 142.75, and again at 143.50, and support zone could come in at 138.48. Any break above this major support, below this major support, could lead to a sharp drop down towards maybe 136.80, 136.40 levels. So if we apply some of the technical analysis tools, so here we're trading near the 200-hour exponential moving average. We got some resistance for the past couple of hours, 1, 2, 3. Currently we're trading at the 200-hour exponential moving average, so we have to keep in mind to focus on this level. Also the RSI touched 70 and then drew back a little lower, and then we are going to 70 again. So we are trading near the short the interim support that held last week on the 5th of May. So it was around 140. We had a little bit of a double top, and then the market went down, getting all the target. Now here we're back to the support level. The support turned into resistance, and it is coinciding with the 200-hour exponential moving average. So for any short term trades, you have to look for any resistance near 140, 170, and for support you have to look for 138.40, 138.60. So this is for the Canadian dollar. For the New Zealand dollar, we're still trading inside this channel that we talked about last week. So if we go for the weekly chart, we posted the highest close since early April. On the daily chart, you can see here we are still trading inside this channel. So we need any break lower or to break the highs in order to have like a straight move or a clear move. And in the New Zealand, we have to take care of this week's central bank meeting. The RBNZ is meeting on Wednesday, so any outcome from the RBNZ and as a catalyst for the market. The market is finding resistance near 161.55 and again 161.76. So this area between 161.50 and 161.80 for support, and any break below this level for a little bit of a move down. So here we've witnessed some reversal exactly from the previous support near the 60 level, psychological level. Any break below the 60 level could take us lower towards 115 0.59 level. So you have to keep in mind that we have the Reserve Bank of New Zealand this week. Any surprises from the RBNZ that aren't priced in the market could lead to a move either to the upside or to the downside. There are some talks of the probability of doubling the quantitative easing for the asset purchases program. So we have to keep in mind any announcements regarding the RBNZ meeting outcome. Let's go for gold. We have a pretty good setup for gold on the weekly chart. We're still trading inside this consolidation zone. If you go for the daily, we are trading here near this in this consolidation. So we had a move higher, and now the prices we are witnessing higher lows and lower highs, forming almost a symmetrical triangle. So the price is trading near almost here. So we are trading in consolidation near. We are forming lower highs and higher lows, awaiting fresh fundamental drivers to either push the prices higher above towards their highest levels since 2012, or to retest the lows of almost 1660 again, or 1640. So this is the formation for gold. We've been trading inside this formation since April. It's been a month now. Uh, Lower highs and higher lows. So we have to look for either higher highs or lower lows for any directional move in the coming week. So this is for gold prices. They took some lift earlier today from the talks that the White House is considering fresh round of stimulus. So this could support gold prices on the long run. So we saw gold rallying towards 1711, and the gains were faded, and now we're trading back near 1700 levels. So this is for gold. You have to watch out for the breakout from this consolidation zone. Let's go for oil. I'd like to remind you that the expiry for this oil contract is on May 15th, on Friday. We're trading here inside this consolidation zone. For the past week, we traded near the high and near the highest levels in the month. So on Monday there was a pretty cool rally. Wednesday, Thursday, and Friday, market was trading in a range between 22 and almost 26. If we go for the hourly chart, it is much clearer here. So you have to look for any break below 22.85 and any break above 26.74 for a rally in oil prices. There was this trend line. The market traded broke below this trend line and retraced to it, and then here now we're trading above the previous level. So we have a higher high from here, but still this high is in focus and for any move higher, so it could provide some resistance. Also maybe prices could face some pressure as long as we approach the expiry date. So you have to keep in mind if the current contract could have the similar performance like the previous one, especially as some countries are still on the lockdown and oil demand levels aren't back to normal, so you have to be careful for trading oil this week and the next week. So we move to Dow Jones now. The Dow Jones posted on Friday its highest weekly close, also since early March, on the positivity that there were some states reopening, and also life is coming back to normal in different countries in the world. So this is for the Dow Jones. However, if we go into a closer look on the hourly chart here, we can see that the market is having a lower high. We had a little bit of reversal today, and we have this line in focus. So you have to focus on this trend line, and in terms of any break below this trend line could lead to a move could lead to a move towards 22,800 and maybe towards 22,200. And on the upside, you have to look for any reversal and the close above 24,450 for a trade higher near 24,800, and maybe we can close this gap after towards 25,100. So this is for the Dow Jones. To recap, for the upper level, you have to look for any break above Friday's high of 24,500 almost, and then 24,770, 24,800. Any break above these could take us higher towards 25,100, 200. And here also the previous resistance levels are now being considered as support. We saw some support here last week, and now also we are witnessing some support. So any break below this level maybe could have a rapid drop towards 23,550. So we have to monitor the developments of the coronavirus, especially that the prospects of reopening the economy are taken into consideration by investors, but also the fears of second round are weighing on the risk sentiment. So this is for the Dow Jones. Mainly, this is it for today. We're open for your questions. So if you have any questions, please write them down so we can or we can have a discussion about your questions. Okay, perfect. So this is it for today. Thank you all for joining. On Wednesday, we have a webinar talking about the relative strength index and the stochastic oscillators, and how to use them, how to trade these oscillators. So, and also their divergences. So you can visit our website or our social media, and you can check the link for any registration, or you can email us at webinar@icm.com to help you register. So this is all. Thank you again for joining.